Well, today the insurance industry said losses from Tropical Cyclone Jasper, which slammed into Far North Queensland, along with the storms in New South Wales, Queensland and Victoria between Christmas and the New Year, are now more than $740 million, which is disturbing enough, but lurking just over the horizon, another tropical storm, Kirrily, is likely to develop into yet another cyclone. Now, the big questions: where will it land, who will be affected, and will there be affordable insurance available for those affected? Andrew Hall is Chief Executive of the Insurance Council. It's always great with his time. In fact, he's in Cairns today with community forums, and many thanks for your time, Andrew. I just want to start by just asking one thing about Jasper when it came in. I mean, it was significant in terms of the floods. The question is whether those people affected by those floods were going to be covered by insurance in the insurance pool.
Well, thanks for having me, Ross. I'm actually just back from Cairns, so I'm back in New South Wales, but the team are holding community meetings up there tonight. There's been some confusion up in Cairns in that area in discussions around the cyclone reinsurance pool. I just want to be very clear. It has no effect on your insurance policy. If your policy covers you for flood, you are covered for flood. It doesn't matter what the reinsurance pool does or doesn't do. But what the industry is looking at very carefully in the aftermath of Jasper and watching very carefully now with this forming cyclone in the Coral Sea is the design of the reinsurance pool covers flooding for the first 48 hours. And then after that, insurers go and get reinsurance from the private market. Now, what we think is the case is that in most of these cyclones, it leaves a very long tail of wet weather that has the more costly impact. And that's what we're tracking very carefully at the moment. We saw with Tropical Cyclone Jasper, it went north, it hit around, the Douglas Shire, hit a lot of Indigenous communities and the like. It was actually the damage from the flood that occurred 4 or 5 days afterwards in the northern beaches of Cairns that has been the most costly. And it's what we're watching very carefully with Kirrily because as it's forming, we're noticing that it's bringing a lot of water with it. And a lot of that wet weather, if it hits the current river systems on the east coast, around Mackay, Rockhampton, all the way down to Bundaberg, they are very full river systems at the moment. So we may see quite a bit of flooding, and that's what we're on standby for at the moment.
We put a graphic up just a short time ago. We might put it back up again for people to have a look at here. And that is that Jasper itself, despite the flooding, was not particularly expensive as an insurance event, especially when you compare it with those Christmas storms in Queensland, New South Wales, Victoria between Christmas and New Year, which are a much more expensive event, especially with household claims in particular.
That's right, Ross. And one of the things that we are concerned about that it indicates up in the far north is that there is a higher level of either under or non-insurance. And that was something the industry's been very aware about and governments have been aware about for a long time, that the cost of pricing insurance driven by flood and cyclone in Northern Australia has made it very expensive. It's been a product that in the north of Australia, the ACCC found that insurers lost about $800 million providing over a 10-year period. And that's why the cyclone reinsurance pool was established, and it's still really only just coming into full effect. So it is a challenge for insurers operating in the north of Australia. 60% of all natural disasters and insurance events happen in Queensland, and that does have an effect across the country. And it's one of the things we've been talking about with the federal and the state governments everywhere is that the premiums are really the symptom of the underlying problem, which is the cost of the risk of natural disasters on our homes in Australia. And those have been mounting. Since 2019, it's been something around $16 billion of insured claims made because of catastrophes. A large chunk of them came from just the one flood event in 2022. So as a country, we've got to do more as we move forward when these events happen to make hard decisions around de-risking some of these areas in the cleanup.
And just very quickly, there's mitigation, obviously, against flood. You and I have spoken about that many times on this program, but that's very much harder to have mitigation against cyclones, of course.
Well, actually, cyclone mitigation isn't that hard. We've got a lot of the technology. Indeed, James Cook University in Townsville has done a lot of work about how roofs can be strengthened, garage doors and the like. Old Queenslanders can be really strengthened to survive up to a Category 5 cyclone. We understand how to do it. What we think should happen is moving forward, there could be government schemes, for example, rolled out. There is a Queensland government scheme. It should be rolled out more broadly.
Yes.
It could be accredited to builders, and insurers could take that into account when they're pricing for premiums.
Yes.
That's the sort of work we could be doing.
I'll tell you what, Andrew, always good to have you in the program. We do hope that people stay safe with that cyclone really bearing down. Thanks for your time.